Welcome back to White Forge. 2 trades, 1 protection. That is the entire story of this chart. The first trade, 47%. The second trade, 27%. Both caught by the indicator. Both clearly signaled before the move happened. And then, the moment that separates a systematic trader from everyone else, the indicator switched off the uptrend signal, the downtrend took over, and what followed was a 27.91% drop over 104 days. A move that wiped out more than $24,000 per Bitcoin from peak to trough. The indicator didn't just find the gains, it protected against the loss. And today I am going to walk you through exactly how it did both. I build systematic crypto strategies, data-driven, indicator-based, no emotion. What you are looking at is a trend divergence indicator that tracks Bitcoin's uptrend and downtrend momentum simultaneously. The cyan line represents uptrend dominance. The purple line represents downtrend dominance. The oscillator at the bottom quantifies which side is winning and by how much. The chart covers September 2024 through to the present, and within that period it contains 3 distinct phases that together tell you almost everything you need to know about why systematic tools outperform gut feel trading over a full market cycle. Let me take you through each one. Phase 1. The 47% move. Look at the first red arrow on the chart, pointing up and to the right from around October 2024 toward December 2024. That arrow represents a 47% gain in Bitcoin's price during that period. Now look at the oscillator at the same time. The cyan uptrend line is spiking hard. Big, aggressive, positive readings pushing well above the zero line, in some cases reaching toward 1,500 and beyond. The purple downtrend line is quiet, subdued, barely registering. This is uptrend dominance in its clearest form. The indicator is not ambiguous here. It is not giving mixed signals. The cyan oscillator is shouting, momentum is real, upside pressure is overwhelming. Downside pressure, the trend has conviction. Bitcoin went from approximately $60,000 to near $90,000 during this window. A 47% move in a matter of weeks. And the indicator had its clearest uptrend signal of the entire chart right at the start of that move. This is what a clean entry signal looks like, not a prediction. The indicator never predicts, but a real-time confirmation that the dominant force in the market is upside momentum, and the data supports being in the trade. Phase 2, the 27% move. After the first peak, the market pulled back. Bitcoin dropped from around 90,000 toward the 75,000 to 80,000 range through late January and February 2025. The purple downtrend line appeared more aggressively in the oscillator during this period. You can see it clearly, the purple readings turning more negative while the cyan signal faded. For most traders, this pullback was confusing. Was the bull run over? Was it a buying opportunity? Was it just noise? Without a systematic tool, these questions have no clean answer. You are just guessing. But look at what the oscillator did as we moved into March and April 2025. The cyan signal started rebuilding. Quietly at first, small positive spikes, tentative momentum, then stronger. By the time Bitcoin pushed up through 90,000 again in April and May, the cyan oscillator was producing dominant positive readings once more. That was the signal for phase 2. The indicator confirmed the uptrend had resumed, and from there, Bitcoin made another 27% move. The second red arrow on the chart pushing toward the cycle high near $108,000 to $110,000. 2 separate signals, 2 confirmed uptrend phases, 2 documented gains of 47% and 27%, both visible in real time through the oscillator, both entered with data confirmation rather than hope. Phase 3, the protection. This is the part most people never talk about because gains are exciting and protection is boring, but protection is where wealth is actually preserved. Look at the red measurement box on the chart. It sits over the February to April 2026 period. Inside that box, Bitcoin dropped $24,177 in value, a 27.91% decline over 104 days. Volume during this period, 1.12 million BTC. This was not a minor pullback. This was sustained, heavy, high volume selling that ground Bitcoin down from approximately 86,000 all the way towards 62,000. Now look at the oscillator during this exact same window. The purple downtrend line is at its most dominant reading of the entire chart. The spike reaches approximately negative 2,000. The most extreme downtrend reading from September 2024 to today. And crucially, this extreme reading on the oscillator did not arrive quietly. It built progressively. The purple line started going more consistently negative from late 2025 onward. The warning was accumulating in the data for weeks before the worst of the price decline happened. A trader watching this indicator did not need to predict the crash. They just needed to watch the oscillator shift from cyan dominance to purple dominance and respond by reducing or exiting their position accordingly. The signal was clear. The data was there. The result, instead of sitting through a 27.91% drawdown over 104 days, watching $24,000 per Bitcoin evaporate while hoping for a bounce, a systematic trader following this indicator was either out of the trade or significantly reduced based purely on what the data was showing. That is not a small thing. That is the difference between ending the cycle up significantly and ending it nearly flat, or worse. The oscillator right now. Let us look at where the indicator stands today because the current readings are genuinely interesting. Cyan uptrend oscillator 357.86, positive, growing. The uptrend signal is starting to rebuild after the extreme negative readings of early 2026. Purple downtrend oscillator minus 1,137.11. Still deeply negative, still showing that downtrend pressure has not fully resolved. The right side of the price chart shows the range we are currently navigating, between approximately 62,435 on the low end and 86,612 on the upper resistance zone. Bitcoin is currently sitting around 71,760, right in the middle of that range. What does the oscillator tell us about this moment? The same thing it told us in the summer of 2024? The battle is not yet decided. The purple downtrend is still dominant in absolute terms, but the Cyan signal is growing. The gap is narrowing. The extreme of the downtrend pressure, which bottomed near negative 2,000, has significantly eased. This is not a buy signal, not yet. The systematic approach requires the Cyan oscillator to demonstrate clear, sustained dominance, and the kind of readings we saw in October 2024 and again in April 2025. We are not there yet, but the direction of the oscillator is shifting. And when that shift completes and the data confirms uptrend dominance, the indicator will show it clearly. The trader who watches this does not need to guess whether we have bottomed. They just need to wait for the data to confirm and then act on confirmation rather than hope. What this means for you. Let me put the full picture together, because I think it is more powerful when you see it as a complete system rather than three separate events. Phase 1. Cyan dominant, 47% captured. Phase 2. Cyan returns after pullback, 27% captured. Phase 3. Purple dominant, 27.91% drawdown avoided. That is the value of a trend divergence indicator across a single market cycle. Not a magic predictor, not a guarantee, but a systematic, objective, real-time measurement of which force is dominant, uptrend or downtrend, and a clear signal when that dominance shifts. Most retail traders experience the same period very differently. They caught some of the upside, but held too long into the distribution. They averaged down during the decline because the price felt cheap. They watched the 27.91% drawdown in real time and either panic sold at the bottom or held through the pain, hoping for a recovery. The indicator does not eliminate all of those difficult moments, but it gives you something far more valuable than any price target or prediction. It gives you a framework for making decisions based on what the market is actually doing, rather than what you think it should do. And across this chart, from September 2024 to today, that framework delivered 2 confirmed uptrend signals and 1 clear downtrend warning. The data was there every single time. If you want access to this indicator and want to start applying systematic trend analysis to your own Bitcoin trading, the link is in the description below. If this gave you value, like the video and subscribe. I publish consistent content on systematic crypto strategies and what the data is actually telling us about the market right now. See you in the next one.